Hello, I'm Lance Zimmerman with the CattleFax Closing Bell, brought to you by Pfizer Animal Health. Most of the cattle and beef industry understands that supplies are tightening. In recent years, the declines have been the most extreme at the cow-calf and stocker levels. Now, the supply reductions are reaching the feed yard and end-user segments. The inventory reductions have created a marketplace that passes higher relative prices down the supply chain. The largest incentives are often passed on to the owners of calves, feeder cattle, and fed cattle to encourage additional production. This trend can be seen in the price ratios for beef and cattle among the different supply segments. The USDA composite cutout value as a percent of the USDA all-fresh retail price has been at 40.3% for each of the last 2 years. This is the highest value since 2000, excluding the 2003 BSE year. It shows that retailers have been more willing to bid dollars back to the packer and processing segments to secure beef. The same trend is noticeable regarding fed cattle and wholesale prices. The CattleFax fed cattle price, minus hide and offal value, as a percent of the USDA composite cutout, has increased considerably in the last 2 years. The 2012 value of 58% is the largest price ratio going back to at least 2000. As you work down the supply chain back to the cow-calf producer, the same trends hold with each segment capturing more value from the level above it. That will likely be reflected in the 2013 profit outlooks for each of the segments. Cow-calf producers will command the most comfortable margins, with each sector above it capturing relatively smaller returns on production. Prices in the fed cattle market were steady to mostly 50 cents higher in the limited test at recording time. Live cattle futures have traded higher this week, leading sellers to hold for higher prices. Live trade has been noted at $124 to $124.50 per hundredweight. Dress trade occurred in the north at $198. Feeder cattle prices were $1 to $2 higher for the week, and calf values continued to sell in a sideways pattern. Increased movement was noted in the southern plains, as cattle were leaving wheat pasture early due to drier weather conditions. Slaughter cow values were $1 to $2 higher for the week, and boxed beef was mostly firmer for the week as some last-minute buying for middle meats developed. Select boxes found additional support from improved interest for chucks and rounds. Corn prices declined for the week as demand remained lackluster both domestically and abroad. Thanks for watching, and remember to visit CattleFax.com to become a member and receive the latest market news and analysis.
The beef business has never been for the faint of heart. The pressures are real, the risks are high, but the opportunities have never been greater. So how do you sort through it all to decide which way to go? For more than 40 years, CattleFax has led the way. Become a member at www.cattlefax.com. We're the time-proven leader in research, analysis, and information, equipped with the industry's most powerful database. Our team is impartial, objective, our vision is global, and our focus is you. CattleFax, the deciding factor.